This is an exclusive VIP screen share. And what we're going to be doing is looking over Bitcoin, some of our coins, and it's really easy to do the woulda, shoulda, coulda, woulda syndrome. Yes, I said woulda twice. The woulda, shoulda, coulda, woulda syndrome. Man, I could have gotten to this trade. It broke this level and it went up 50%. But would you really? We're going to see some of these coins to where they've already moved, but it was extremely high risk at the time. So in my opinion, it would have been safer not to enter those until we get a better structure. And so that's the main concept for today. Looking at Bitcoin, seeing what Bitcoin's doing, seeing what some of our coins are doing, and then of course, seeing if we can find a coin or two. If you have any questions, definitely put it in the chat. If you have any coins you want me to do, let me know as well. So let's go ahead and get started. Let's first look at Bitcoin. Bitcoin is the driver. So let's look at Bitcoin. We mentioned this in the VIP group. I want to say it was Tuesday, Wednesday. When I'm looking at all these charts, it looks like it might be turning. Nobody knows. The reason I was saying that is one, the lows weren't getting hit as often. So our shorts are doing well, and then they just slow down. And then now they start going up, breaking our highs. And at this time, we're moving our stop loss into profit or further into profit. And then as it's going, say Wednesday now, I'm looking at this as I think it's going to flip possibly Thursday, Friday, and we might be going green, but again, nobody knows. And one thing really it bothers me is when you have all these YouTubers, I called it, I told you, but they're speaking both ways out of their mouths. If it does this, it'll do this, which is true. However, whichever way it goes, they called it. For me, I don't know which way it's going to go, man. I'm telling you right now. But if it breaks a level, we're going to trade it that way. If it breaks another level, we're going to trade it that way. But the thing is, being able to identify which way it might go. And all this is through thousands of hours of just being in these charts. So where you can see what I've noticed on the last 10, 20 charts that I'm looking at, the highs aren't going as high. And some of these coins, maybe the past 20, 40 of them, the lows are starting to get broken and they're not bouncing off of certain levels. That's what you're really paying for. You're paying for you are literally doing time management. You're leveraging your time because you're not in these charts all freaking day. You're able to go and enjoy your family or friends or going out or whatever. And then just know that, oh, the market's not looking good because, well, somebody who's in these charts all day long sees all these coins doing pretty much the same thing. So here we go. And we're going to show that too right now on Bitcoin. So Bitcoin, these are our main levels. I am not bullish overall, macro, bigger picture, until we break this level. This is when they said, oh, we're going to make the cryptocurrency part of the reserves. So we had this nice pump. The next day, it took it all back. It liquidated so many people that thought we're going to start going to the moon. But just know whenever we have these nice pumps, we're expecting to come back 38%, maybe 50%. So this created this zone for me. Now the price can come in here. I'm not bullish. Once it breaks out and starts doing a support bounce, then I'll be bullish macro. But until then, we can still do longs, even though we're in a bearish trend. Lower highs, lower lows. Now, inside, this is the macro. This is the bigger picture. This is the external structure by having these pivots. These are the highest pivots, and these are the lowest pivots. So this is external structure. Anything inside of this, from to this point, is called internal structure. And the lower time frame you go, the more internal structure you have. So just how you can have a pattern inside a pattern. Let's say you have a cup and handle. Well, inside this cup and handle, you also have a bull flag. Inside this bull flag, you also have a head and shoulders, or shoulder, head, shoulder, comes down, maybe goes to the measured move. Then inside this, now you have a double bottom. So all this is internal for the external pattern. Hopefully that makes sense. All right, so now we're looking at this, and let's just dive into this. This is our main level that we wanted to break in order for us to get bullish long term. Until then, this is the high that we need to break before we even reach this. This is our key level. This level is extremely important. 87.498. We can just call it 87.5. And now let's go to a smaller time frame. Let's go to the 4-hour. On the 4-hour, I was thinking price went up, price came down, nice golden pocket area. Price came up, was about right here. It would be really nice to see a lower high come down about 38%-ish, then come up, attack this level, continue on. It had other plans. Price action can do whatever it wants. We are at the mercy of price action. Price action went up, attacked this level really quick, went up to this level, pulled back, barely, not even 20%. And I like to see him about 30, 50%, 38, 50%. That's a good, healthy thing. Here, it barely pulled back, and then it shot right through it. So what I'm looking at is potentially when this does run out of gas, we might do a nice dump. When it runs out, we don't know when it's going to run out of gas. And this is why we are always at the mercy of the price action. Now, because whenever we have good moves, we will always see divergence, always. So whenever there's a pump or a dump, you will see divergence. And why? Because it moved too fast. Remember, indicators, they are a lagging indicator. Price action is king. Price action will move as fast as it wants. When that happens, the indicators have to catch up. And because they are lagging, they will show you divergence, whether it's on this time frame or a different time frame. They'll show it to you. So this is the reason why I don't look for divergence. I can just see, oh, we had a big move. Chances are we're going to come down. Doesn't mean that we have to right now. It just means that there's a really high, the higher it goes, the faster it goes, the higher probability it's going to come down. So that's how I look at all that. All right, so let's come back to this. Here, I thought it was going to come down, and it didn't. Let's go to the 1-hour time frame and just zoom in on this. One thing I do want to show, and I was, so this, and all this is just teaching, and if you can see this on Bitcoin, you can see this on any coin. So before I continue here, I do want to show this, and to me, this is extremely important. First, we're in this downtrend. Then we start making higher highs and higher lows. This is more or less internal, well, this is internal structure that is leading to the external, leading to a major pivot point before we possibly change direction. So all this is just noise if you're looking at it from the bigger picture. Now, one thing that I do want to point out, make sure our magnet tool is on, using the ray tool, hopefully y'all can see that, using the ray tool, what I want to do is I want to go to this lowest point and make sure it snaps in place. That way there's no bias. And when we broke this trend line, this is not when we became bearish. This is just saying it broke the trend line. It's still good as long as we do not break this level. This is our low. This is our strong low. The objective of every low is to break the high. Once it breaks the high, this low now graduates to become a strong low, or it just becomes stronger. I'm trying to think of analogies, but it just becomes stronger. So now, even though we broke this trend, we still have a chance to potentially continue this uptrend. However, this is market structure. However, it breaks this. It finds support, then it breaks it, then it gets rejected, then it breaks it above it, and then it breaks down again. So all this is easy to see after the fact. The point is, what I'm trying to show is that this is still bullish, even though it came down, until it breaks this. Once it breaks this, we're bearish. Automatically. Comes down, and now price, as I mentioned, can do whatever it wants. We're at the mercy of price action. Comes up, and now what we're thinking is it is okay for price to come up to continue the down based off of what I teach. Here's our high. Here is our potential low. Let's take off this magnet tool. Here's our potential low. So this is all we see. We don't see any of this. This is all we see. And I would like to see it go to at least the 382, and it did almost right here. I would love to see it go to the 0.5. This is better for me. 618 is okay. Anything above the 618, I get worried. It's like, oh crap, it might start reversing the trend. Maybe. So as it's coming down, comes up some more. And now it's like, oh, we might pull back 50% of this to here and now start coming up. So this is the most important part out of all this. Nobody knows what's going to happen. You might see mentors that bamboozle you. That'll say, oh, it did this number, it reached this level, it's reversing. It met this support level, it met this MA, it meant this POC, meant whatever, because they see what happened. If they didn't already know what happened, their decision would be different. For me, I trade in the moment. I'm thinking, fine, it crossed the 618, it might be showing strength. I think now we might go up, even though the original plan was it should potentially higher probability of it coming down. I think now we might be flipping. This might be flipping right here. If we get about a 50% retrace to here, this is our decision point. Is it going to come up, come down, attack these levels, and come? If it does, fine. Our shorts, we either close them or remove our stop losses to where more than likely they'll get stopped out. And then now we go long. Here it came down, broke underneath this again. Good. Now we're not worrying about going long. Our shorts are continuing to play out. We break this level, even better. We break this level, perfect. Now we're in the money. It comes up. Why? Because 50% of this move, this is the golden pocket. It's right here. Comes down. Here's where I would think that it might, if we're going to go up, because it's 50% of this move about, then we got to watch out for this right here. But it came all the way down. Double bottom. What we don't want now is it breaking this. Because if you do patterns, this is, of course, your neckline. If you don't do patterns, this is your resistance level that is key because it stopped it from coming up. So what we don't want, if we're still bearish, what we don't want is we do not want our price action to cross this. We want to see 50% of this move to about same area, about right here, and then roll over half of this. Here's our decision point. Is it going to come up to attack this, or roll over? This is what we want to see for our shorts. It doesn't do that. Now it breaks this. No problem. Now, more than likely, our shorts are stopped out. And now we're looking, and at this time, this is when the market is changing. This is when the market is saying, you know what, we might end up going a different route. We might go a different route to where, and this is actually when, I think this was what, Wednesday on the 9th. Let me double check. Wednesday was the 9th. This is when I started notifying everybody that it looks like we might start changing and our shorts might not be playing out, because I see all this. This is what I'm looking at. And I'm showing you my secrets so that you can find other coins. So I have a very bad business model. It's horrible. It's probably the most horriblest business model ever. My business model is to show you all of the tips and tricks, to show you all of my secrets. That is my business model, because I am willing to give up my fame and fortune so you don't have to depend on me. I know it's horrible, because in order to do this as a business, I need to have residual income. Every single person who's here has to rely on me for everything. I want to empower you. Now, hopefully, you learn how to trade and you do it as a pay it forward. 99% of the people won't do it, and I get it, because why? Don't need to. I already know everything. But not saying that I know everything, but the stuff that you get from me, from other people. So what I'm doing right here is the worst business model, hands down. I show you everything. So to me, I would sleep better knowing that you know how to fish than rely on me to take you out to the fishing spots. All right, moving on. So here, Wednesday is when I'm thinking, you know what? I think the market's changing. I can see it, but not really, because it's too early. I'm seeing that all these levels aren't being, as when we're coming down, it's not looking the same. what I've been staring at for all these other hours, 20, 50 hours that week, or no, even more. You average around 12, 14 hours. Anyway, it's just looking different. And you'll see that once you're in these charts all the time. Now, the benefit of being in the group, you don't have to start the charts. Anyway, so then it starts coming up, and it comes up to here, and it starts pulling back, which is fine. I'm expecting that. Now I'm expecting a pullback from here about here. If we just pull this fib retracement, make sure the magnet tool's on, go from the low to the high, about right here, 50%, boom, bingo, bango, bingo, bango. 50% of this move from here to here is where I would like to see it come down. So it could go to the 382, which is fine, but I would love to see it go to the 0.5. Inside the golden pocket is fine, as long as it doesn't break this, because now my thought process of potential longs will, now we're going back to shorts. Because now if it breaks this level, now I'm thinking breaking this level 786, maybe come here and it's now losing the strength, breaks this level, now it's going to attack this one and possibly this. Now we're back to shorts. And we're literally depending, now this is not flip-flopping. I have to make that very clear. What we're doing, overall macro, we're bearish. But inside of that bearishness, we can still go long until it gives us a reason to continue the bearish moves. And that's what we're doing all throughout here. We're not flip-flopping. It's like, oh, let me flip a quarter. No, we're looking at all these levels. And these levels, so if, for example, our longs that we have right now, our longs will continue doing well. And even though they're short term, I'd say maybe a day or two before we change again, they may go into 3 or 4 days as far as just playing out. Our first target hits, our second target hits. And then after that, then it continues possibly going up for maybe a week. And we're moving up our stop loss. And finally, when we do get stopped out, it's because now the market's resetting. And then now we go the opposite way. And so it's just patience. That's all it is. So here came down to my 0.5 inside the golden pocket, barely started coming up, which is nice and healthy. Right here, when it started pulling back, I would have liked to have seen it go to the 382, about right here. Instead, it only did about 20%. So from this level, came down to 23%. That's it. This to me is not healthy. I want to see it at least to the 382, 0.5 preferably. But because it went to the 382 or the 23% mark, this is telling me that if it continues going up, it's telling me if it continues going up and then it pulls back about 20% and then continues going up and then pulls back 20%, then continue. This is not healthy at all. And then pulls back and then tries again. And then once it breaks this, get ready for a nice dump. This would be the more official because this is the start of this run up. So for me personally, because you want to do a range, and this is the start of this. So what I would do, this one for sure. So 50% would be about right here. So from here to here, about 50%. Let me get my tool out because I might be slightly off. Oh, bingo, bango. I thought I was slightly off. So this is where I would think if it does this, where it goes up, barely pulls back, goes up, barely pulls back, goes up, barely pulls back, goes up. And now we create a lower high, breaks this low. Guess what? We are going down pretty hard. And depending on, shoot, man, we might even go down to the 618 because this right to me is nice. It's a little support. This is on the 4-hour time frame. It's a little level of support, but you can see that we have this throughout here. So this would be a really nice area for it to bounce right around 84. If it does this, we don't know. Nobody knows what's going to happen. It could dump right here. But if we break this level, we know, let's get the measurement from here to here to where it might go down to, and then see what happens. Does it roll over, come up, do a lower high, which is good. Then about the midway point of this decision point, is it going to fight, attack this, or is it going to just roll over? And now we're going for this. So that's the whole thought process. And this is how I'm able to see, just like when we were bullish earlier, and I said, well, looks like it's changing. Looks like it. We might start going down. Sure enough, about 2 days later, we start going down. Same thing here, just recently, where it's like, oh, it looks like we might be changing. We might start going up. Sure enough, 2 days later, well, it takes time to go up. We don't just go up right away. We have to start making the higher highs, higher lows. For example, with XRP. Now's the time. If you have any questions, guys, put in the chat. If you have any coins you want me to do, put in the chat. But the beginning part is pretty much just reteaching and giving you a little bit more tips and tricks on what I do. Now for XRP, we were in this. We had a stop here, stop here, stop here. I was pretty sure we're going to get stopped out. We can call it break even. And this is a little bit in the positive for us since we're doing a short, but we can just call it break even. Here, price was here. I'm thinking it's going to come up, come down, pivot point. Price went up, came down, pivot point, came up. Now, this is the time, right around the time where I'm thinking stuff might start changing. Let's just see what happens. And it's on the 15-minute time frame. And then sure enough, now we start making higher highs, higher lows. And then this is the progression that we'll see. Now, granted, for me personally, I don't want to post 10, 20 charts a day because I feel that it wrecks people. I really do. And I would rather have 1 and 2 charts, maybe 3 per day. And that way, when we do post results in the results group, there's an extremely high probability you're in those charts versus me trying to pump my group, trying to trick people to join it because we had 20 of them that did amazing, but I posted 100. To me, that's not fair. I don't want to step on your back to elevate the group. The people that are in the group, they're in here because they trust me. They trust the process. I'm old school, guys. All I have is my word. All I have is my name. I don't want people to say, oh, I joined his group and he was putting out all these charts. All I have is my name. That's it. So I'm literally in these charts almost all day long just to make sure that you're in good steps so I can see what might happen. Now, granted, do we always win? No way. We lose because we're at the mercy of the price action. It could look great and then bloop, turns around. I try to be as honest and as upfront and transparent as possible because I think y'all deserve it. So here's our level, and then it broke out the level. Nice. I would like to see it come back here, and then we could enter the trade. But it just went up sideways and boop, took off. And now, one thing that's very important, we will miss trades. For one, we're not jumping into all these trades. So we are not doing the shotgun effect. What does that mean? We're not entering 10, 20 coins. We're just entering, we're in sniper mode. We do 1, 2 shots, 3 shots. That's it. Everything that I say is from experience. This is what's going to save you so much time, so much money, and so much effort. I have videos that are 3, 4, 5 minutes long on average. If you want to make money, I will show you how. I would strongly recommend getting the VIP. You're going to make money. Now, granted, none of this is financial advice. It's never hopes and dreams and empty promises, nothing like that. See what I do. See if this makes you money. I give you my real life experience based off of my trainings, based off of my teachings, what I would do at that moment versus what everybody else does because they want to sell you their course. They want to sell you all that stuff. I show you that my stuff works. Do we win? Yes. Do we lose? Sometimes. That's part of the game. But what I do is I show you all this so that you can see, oh man, I lost today, but Joe said he lost too. So it's okay. That's what I want you to realize, guys. If you like the content that I provide, make sure to smash the like button, subscribe to the channel if you're not already, and leave me a comment in the comment box. And I'll see you on the next video. And as always, let's make this money.